First of all, are you expecting this divergence and the ability of equity traders to ignore some of the red flashing warning signs on the bond markets to be able to continue?
Good morning, Heidi. Thanks for having me. I think so. I think what we are observing right now is clearly that the expectations were low going into this earnings season. You've seen some of the e-commerce names reporting, but okay revenues, but disappointing earnings as most players are spending more. So I think the resilience that you're seeing on the earnings front is going to help anchor some of these names because valuation has indeed become quite cheap in our area of the world.
We talk about the roller coaster ride in Chinese equities, and you make a very fair point that it is really that catalyst of policy action and policy easing that investors have been banking on. That hasn't come, though. So are there now expectations that probably won't happen, at least not to the magnitude that would render these assets, relevantly discounted?
I think what we saw in the last couple of weeks has been quite volatile. The speech by Vice Premier Liu He has obviously put a floor in terms of expectation on policy. But so far, I think investors are taking a step back after the very quick adjustments and the bounce back to say that we want to see more concrete measures to basically fulfill what they're telling us in terms of their concerns about growth and about access of Chinese companies to foreign capital. So now we probably need a bit more follow-up in terms of actual policy actions to basically follow through to give investors some confidence that this is indeed going to come down the pipeline in terms of supporting the overall growth of these companies.
Zhikai, how much have markets priced in the latest lockdowns in China, given that it doesn't seem that China is backing away from its COVID-0 policy?
I think that's going to be a dent on sentiments for sure. Just 2-3 days ago, I think Shanghai was quite adamant that there will not be a whole city lockdown. In fact, this time they're saying that they're basically locking down half the city in each segments. So that's going to be a dent in sentiments for sure. I don't think they're going to back away from the zero COVID policy that's worked well for them because they are concerned clearly about the stability of the medical services as well as the mortality rates that could happen if it get loose in a, shall we say, less wealthy province within China. So that's going to be a dent on investor sentiment, certainly. There are certainly more disruptions in terms of supply lines that we're seeing right now, given that the two of the most wealthy provinces have experienced some form of lockdown at this point in time.
Zhikai, let me turn to our question of the day on our MLive blog, because this is a good one. Has the dollar peaked for the year? And I want to ask, what would that mean for Asian equity markets?
That's a tough question. I'm not a FX specialist. I look at mostly at equities. I think if you look at the major currency pairs, at this particular point in time, it does still seem that there's more things going for the dollar versus against the dollar. We have now heard more and more hawkish speech from the Federal Reserve. It looks like expectation of rate hikes and perhaps jumbo rate hikes, like 50 basis points, are more and more common now. You hear from the various financial press. So that is going to provide tailwind for the dollar. But it all does depends on how bad the contraction on the economic growth will be with the higher rates going into the rest of the year. So it's a very fine balance. But at this point in time, looking at the major currency pairs, there still seems to be some more tailwind for the dollar versus the rest of the pairs.
How are you gaining exposure to the energy and commodity story?
Not an easy one in Asia, obviously, given the ESG concern and expectations that a lot of people have. But there are some companies that we can find exposure to. They're probably not the well-known companies that we find in North Asia, but in spots across Southeast Asia and South Asia, we're finding decent exposure to energy and materials company that probably aren't as, how should I put it, the outcomes are not binomial, as in they would need like $100+ crude oil to basically sustain. And we also found some materials company that are operating in the subsectors that is less, how should I put it, sensitive to the overall price. So that's how we've been getting our exposure to the engineering material space over the last couple of months.